Hi there, welcome to another weekly general update for the 4th and 5th of February, and we've just had another quite instructive week, particularly in the US market. Told us a lot about the momentum that's there, and a particularly good breakout on Friday night. So US market looking very strong. I'm slightly hamstrung this weekend in that the market analyst charts have not updated with the US data. So I don't have a complete set of data for the index and for gold and silver, but we'll be able to determine from the charts roughly where they finished. So first of all, just a reminder that this is general advice only and the licensing details. So the action for the week as a summary, the S&P rose 2% on the week, with probably certainly more than half of that on Friday night, and that was really came about through some pretty strong US jobs numbers, which has really been the missing ingredient up to date. We've seen corporate results pretty strong for the last couple of years, and we've seen some mixed economic data, some good, some not so good, but what was always missing were two things. One was a recovery in the US housing market, and the second one was an increase in the number of new jobs being created, and that certainly came through with a vengeance on Friday night. So that certainly gave the market a big lift. But in the short term, look, it remains very overbought. The momentum is strongly up. It's hard to go short against this momentum, but equally you need to be fairly cautious about buying at this level, because I think we could get a bit of a sharp correction basically any day. And it's not too late. We quite often see some pullback towards the end of the reporting season, which is just coming to a conclusion, so it's not too late for that still to occur. We've seen some good pullbacks in mid-February before, so maybe sometime in the next week we might see that. I'm still looking at a target of 1365, and then depending on how the S&P index behaves around that 1365 level will tell us a lot about whether it's likely to push through and head up to my next target, which is 1440. I suspect that what we're going to see now, from now until the seasonal top, which is the end of April, early May, which is what happened in 2010 and 2011, is I think the direction is higher. We'll get some ups and downs and some corrections, but I think net the direction in the US market is higher. So probably looking at a bit of a volatile run to a maybe May peak, and then we'll probably get a few months of sell-off. Now the ASX 200 lost 30 points on the week, down about 0.7, so we're back to the normal pattern where the ASX is severely underperforming the US market. But we will see some good catch up on Monday. The Australian futures finished about 43.20 I think on Friday night, so we'll probably see our market up 60-70 points at least on Monday. We're also seeing the small caps with very good momentum, and particularly the small cap resource stocks, so that's looking really good. The Shanghai index has certainly confirmed the uptrend. It's been in that situation now for several weeks, and it's still holding those gains from the reversal off the lows a few weeks ago. Now gold finished down $10 on the week, and that was really all in the last session. The gold lost about $30 in the final session of the week on Friday, and so it may have formed a reversal top, which was always going to happen. We were overbought in gold and silver, so that reversal was always going to happen. I had a target at 1767. It reached 1762, so that's close enough for a sheep station, and so I think we might see now maybe 1 to 2 weeks of downside in gold. I don't expect it'll be major, but we'll have a look on the chart where that may go to, and then that will set up a really good buying point, both for precious metals and also for stocks. Silver was down about 30 cents on the week, and again pretty much all of that on Friday night, and I think we'll see quite an explosive move in silver once it bottoms out. Copper clearly back in uptrend. It finished flat for the week, and is again just holding very close to that $4 mark, and the supply-demand situation for copper continues to look pretty robust. Just some general comment. As I said last week, the threat of a crash I think is gone for now. We might get some sharpish corrections, but I think they'll be brief and they won't amount to a great deal. And I say that because the results coming out of Apple and Caterpillar demonstrate just how well those sectors are going. So the technology sector in the case of Apple, and it also tells you a lot about the American consumer, because let's face it, iPhones and iPads are not an essential item. They're a discretionary item, and yet Apple is selling every single unit that they can make. So that tells you a bit about the health of the American consumer. And the Caterpillar result, of course, speaks, and particularly their outlook, speaks absolute volumes for the health of the global economy and therefore resources as well. So I think those two results are really, really strong indicators for the next 6 months. And then on top of that, of course, we've got central banks. They're ensuring that there isn't any liquidity issue at all as Europe works through its problems. So I really just can't see any nasties to the downside, to be honest. Now, Australian gold producers are really getting into their stride in the last week or two, looking particularly solid, and this is the phase we've been waiting for. We had to put up with a lot of irrational action last year. Gold stocks got hammered. They failed to respond when gold moved up. It really was a very frustrating period, but I think we're just going into the phase now that we've been waiting quite a while for, so make sure you don't miss it. But as with all of these things, the same tide's not going to float all boats. You need to be selective about what you buy. Just don't go and buy anything, and yeah, really important to be selective. And here's just finally, we've been following this Italian 10-year bond yield chart for some time now. Anything above 7% is really nasty territory, but you can see we've now continued to pull back another 0.5% during the week. We're now down to about 5.6. So really that's a strong indicator that the fears in Europe have really pretty much gone away for a while now. So let's go over and have a look at some of the charts, and we'll start with the S&P. And as I said at the start, the data is not updated yet, so I've just put in a little line here that you can see, which indicates where the S&P finished. It finished at 1343 on Friday night. We've got highs up here at 1347 and 1356, and then we've got another little high up here at 1370. So I'm looking at one of these two final tops here, so I've just really picked a midpoint between those two. It also happens to be a big picture Fibonacci level, so around about the 1365 mark I think is reasonable. So you can see that was quite a sharp move on Friday night. We remain overbought. If you look at the RSI, very overbought. It's been that way for some time. The MACD not really showing any signs of turning down as yet, so I think we've probably got another 20, maybe 30 points upside in the S&P, but we could just pull back a little bit first. And then what happens around that level will tell us a great deal about the near term. If we manage to break through that level fairly convincingly, then I think we're heading for probably this 1440 level, which is this level up here. And then of course if markets get really buoyant and that breaks, then we might have a charge at the all-time highs up at 1350. So that's what we're looking for in the S&P. Maybe a bit of up and down over the next couple of weeks, but I am expecting closer to 1370 before we maybe get a bit more of a meaningful correction. Let's have a look at the currencies, the dollar index, which of course is always important. And on that dollar index, now again we don't have the data from Friday night, but you can see the dollar index has slipped a bit in the last couple of weeks and may just be forming a bit of a short-term bottom and turning around. So we'll have to wait and see a little bit more data. It didn't do much on Friday night. And finally, let's have a look at gold, or at least the chart that I can derive on gold. So you can see here, let's get rid of those crossbars. You can see here I've just drawn in a little line here to indicate it where gold finished, down at 1723. So I had been looking for a short-term reversal up there. We got it within a couple of dollars of where I expected. You can see the RSI extremely overbought, the momentum indicator strongly up, but I think we might now get a move to the downside. So let's just have a look at where that move might tend to go. So I'm expecting that we're probably not going to go any further than maybe a 38.2 retracement. Let's move that over there. So I think a 38.2 is probably about what I'd expect. So that brings us down to about 1670. It's possible 1643 we might see that, but at the moment I'm looking for 1670. Might pull up at 1700, but I doubt it. I think we'll probably see 1670. So that would then set up a great buying point for gold, for silver, and certainly for getting back into the gold junior producers. So that's it for this week. I think we've certainly got a lot more clarity now about the near-term direction. I feel very comfortable now, starting to really build our exposure. But A, you need to be selective, and B, you need to get the timing right and be buying the dips. So that's it for this week. Talk to you next weekend. Cheers.